Hello and welcome back to the channel Market Uncharted. Today we have a special topic to discuss, which is one of my favorite products of all time to invest and also a really cool sector to combine with. And it's the ETFs that we can invest for the sector of gold. Why did I make this video? Really simple. As we seen this during the past year 2020, the gold sector has significantly outperformed the broader market over the past year, and therefore it's one of the best sectors to invest. We can discuss the two ideas why this is the case. It's either the flood of money that through the quantitative easing that both central banks of the United States and Europe are doing it, flooding the market with a lot of euros and dollars, and especially the gold being quoted originally in dollars. The devaluation of dollar makes the gold rise, the prices of gold rise. That's the first one. Second one, it's the reserve of value that we as investors, when we see the market is unstable and we see a lot of instability for the future, we tend to invest in gold as a safety net, and therefore the last year has been really good for this sector. And the only thing I would like to point out is the best ETFs at my view, although once again I need to clarify, I'm not a financial investor. This is only my views and my ideas after I did a small market intelligence through the web and through various websites. This I figured it out for me. For me as an investor, what would be the most interesting ETFs to invest, and this is what I would like to present you. So stick around. I hope you like this video. So these are the top 3 ETFs for gold that I would like to present today. It's one of those that I invest more. We have the most three important ETFs in the world with more market capitalization, and let's go one by one, review it and see why they are so interesting. First of all, the SPDR Gold Mini Shares Trust with the ticker GLDM. Again, this is one of the most interesting ETFs around here, with assets under management around 3.7 billion. Just to give you a small idea, an ETF is an exchange traded fund where an investment fund generate this and trade this like a share, and they try to replicate what the ETF is following. In this case, the ETF is tracking the spot price of gold less its expenses. The fund is structured as a grantor trust, meaning that the investors in the fund are direct owners of the underlying assets, which in this case is the gold bullion. So basically, ETF tries to replicate the same movement as gold. As the expense ratio of 0.18%, which is what we have to pay to the investment fund to continue to manage their funds to replicate the movement. And the issuer, it's the State Street SPDR. Let's give a small view on the graph of the last year to understand the movement. Of course, you can see that when the gold, and this is really common, right? The ETFs, they try to replicate as best as possible the asset. So when you see the asset between July and August making all-time highs, in this case gold, it's common that you see the ETFs replicating pretty much the same. You have a few gap ups and gap downs because of the closing price and the open price, but originally it tries to follow up as close as possible. Then we have the second one, the BAR, the Granite Shares Gold Trust. Again, like GLDM above, the BAR is structured as a grantor trust, which investors in the fund as direct owners of the underlying asset. It's really similar to GLDM as well, because that asset is the gold bullion that is stored in a vault in London. So they are actually owners of the physical gold. Assets under management 1.3 billion. and the issuer are the Granite shares, the other were State Street. Lower expense ratio, only 0.17%. This is the cost that we need to have to pay to the investment fund to maintain this ETF and maintain the replication. And again, we can check the graphic. Pretty much similar, as it's exactly the same asset price, the gold bullion, of course, the same type of graphic, although two tickers different, two different ETFs. And here it's when we need to make our business decision. As investors, we need to understand if both replicate so well the same asset price, if both can create the same movements as gold, then why pay 8.18% when we can pay 0.17%, which means that overall we pay less expenses to the investment fund. That's why I put here both, so you can see that there are a lot of opportunities in the market. ETFs are a really common product to be traded, and even though they are both really good, even though they have the average return pretty much similar, then you need to look to other situations like the expenses that you are paying to be able to trade this ETF. And in my opinion, my view, the BAR ticket are slightly more cheaper to hold for a long period of time. As we discussed, in the next few months, it's possible that gold can grow again back to the $2,000. Therefore, holding it for much time, you pay less. Finally, we have the iShares Gold Trust with ticker EIU. Like the other two funds on our list, the iShares Gold Trust is a grantor trust that provides investors with the direct ownership of the underlying gold bullion held in a vault. EIU seeks to track the price of gold less expenses. And again, three types of ETFs with the same underlying asset, in this case the gold bullion, and of course it stands out, the total return pretty much similar. The expense ratio, this is the most let's say heavy on our wallet to maintain, because the expense ratio is 0.25%. The issuer is iShares. Assets under management 32.4 billion, so the market capitalization of this ETF is pretty much bigger than the others. But again, you can see here the 3-month average daily volume, 24 billion trades, shares traded. In this case, shares, because the ETF are traded just like shares. So you see this is three types of products following the same underlying asset with small differences. And this is the type of information and knowledge that we need to have before pressing the button to buy such ETF. Again, you see the graphic of also iShares Gold Trust, and you see it's pretty much the same behavior, pretty much the same gaps, ups and downs. Also, all of these three ETFs are quoted in dollars, so bearing this in mind when you are having your portfolio in euros, that when you are investing in dollars, you are putting yourself to exposition on the euro dollar, the changing of the currencies when you are selling euros and buying dollars to be able to buy these shares. And a special bonus for today. Basically, I just wanted to show you the three ETFs that most likely replicate the underlying asset of gold, but there is also more out there. There is other ideas, and I will tell you about my portfolio. This is a portfolio that I like to hold at least until May next year, 2021, when I feel that probably gold already come back to the $2,000. First one is the SPDR Gold Trust, which is a normal ETF as the others, GLD. I strongly encourage you to also take a look on this ETF, make exactly the same type of comparison that we just made, which is what are the underlying assets that this ETF is following, what is the expense ratio, what is the daily or the monthly volume, and also assets under management of the trust who found this ETF. Then the 5 and the 6, these are slightly different products that we were talking about. We were talking about ETFs, which are traded just like shares. The next two that I'm talking about, first one, it's the gold call warrant, which is a call warrant, which is an option to buy the gold for the maturity of June 2021. And this is sponsored by Vontobel, which is one of the banks that issue this product. And this is a leverage product. It's not like ETFs where you are just investing your own money. This is a leverage product. And I'm just putting here on this video so you can see there is something else out there that is probably really important to take a look and understand that several products can track the same underlying asset. Then, and following a little bit or delivering a little bit to the side, instead of just focusing on gold, I present here also an ETF and a call warrant on silver because silver as also a precious metal, it's always following closely prices of gold. So if gold goes up, silver follows the same behavior. And I have here also a BNP Paribas call warrant, the issuer, for December 2021. If we believe the precious metals will increase in value, this is also a good idea and also a different product to invest. Don't forget also it's leverage, so a leverage product takes more risks than just a product like a share on an ETF where we are investing only our own money. And finally, I have here the iShares Silver Trust, ticker CLV. It's the ETF that tracks silver as the underlying asset and is quoted also in dollars, and it's same movements and valuation. And again, I strongly encourage you before checking this share to do exactly the same type of research, finding the expense ratio, finding the yearly return, and understanding if it's good for you to trade as well. Well, once again, thank you so much to check this video with me. I hope you like it. I hope you enjoy it. Please press the like button and subscribe for more content on Market Uncharted. And always, always, always don't forget, just like the markets, we will not rest. Thank you.